Sri, banks also have a tailwind, right, which is higher net interest margin when
Right.
interest rates increase. And interest rates from a year ago are up massively, which actually helps financial institutions significantly. Do I think it's going to be a problem? I think it is going to be a problem for financial institutions, but I don't think it's going to be as big as some people think. And I certainly think that breadth, which is horrible right now, if you just look at the top 10 stocks in the S&P, that's where most of the returns are, right? I think you have to watch very carefully for breadth to get better in terms of market movements up, and it's something we're watching very carefully.
Breadth would be definitely a healthy sign, wouldn't it? I mean, look, the market has done so well over the past 4 weeks, right, Michael? And partly because bond yields have been dropping and expectations have been growing that the Fed is done with its hiking and will start cutting next year. Are the expectations correct?
I think they are correct. But let's just talk about the word you just used there, market, that the market's done well. In the S&P 500, the top 10 positions have done well in the last month. You still don't have breadth pulling up the rest of the market. Do I think that we're in a situation where the Fed will likely decrease? I do think the Fed is going to decrease. I've been saying for some time, as you know, that I think the Federal Reserve is going to probably pause and then at some point cut. Even if they cut 0.25%, I mean, this sounds crazy, I know. They raise 3%, they cut 0.25%, and then people are going to go nuts in euphoria because the Fed is cutting rates. That's the market psychology we're in right now, and I think that's probably going to happen. I think you're going to see the Fed cut 0.25% sometime in the next 5 months, in my view, certainly before the second quarter.